What's going on, everybody? This is Matt Rinkey, the founder of Illumination Wealth, and I wanted to hit you back with a couple answers to some questions that we've been getting recently about the investment markets. Now, one of those questions is, why does it make sense to even own bonds or fixed income securities right now inside their portfolio? And the reason why people are asking is because the yields are ridiculously low. The 10-year Treasury, for example, its yield is about 0.68%. But I wanted to throw a few things out there for you to consider as it relates to investing in bonds, and perhaps why you would even consider it. Well, first and foremost, bonds and fixed income, they do provide a damper against the volatility of the stock market. For example, in the early part of this year, the US stock market from peak to trough dropped about 35%. Meanwhile, bonds held relatively stable. They really didn't decline while the market declined. So if you have bonds as a part of your portfolio and you see the stock market go down 35%, that part of your portfolio is going to offset and buffer some of that decline. So it is a hedge against the volatility of the stock market. In addition, what bonds also allow you to do is rebalance and manage risk in your portfolio. So as the stock market went down and bonds perhaps appreciated, you can use that opportunity to sell bonds, sell the things that have been stable, and buy stocks at lower prices. It gives you ammo to be buying low and then selling high, so you can use it to rebalance. Bonds also provide a hedge against deflation. So I know we've talked a lot about inflation, but in deflationary times, bonds provide that stability and a hedge against deflation. And another thing to consider is, why do you want to have bonds, or why should you have some fixed income in your portfolio? Well, in the event that you need access to capital for spending decisions, or if you're in retirement or taking a sabbatical, having bonds as a part of your portfolio can be a source of potential proceeds to spend. If the stock market is down and your portfolio is down 25%, you can always pull money out of the bond side of your portfolio and not sell your stocks at low prices. So those are things to consider regarding why you may want to have bonds in your portfolio. But even as an alternative for that, in some cases, there are bond funds that are paying less than some of the online savings banks. So when you think about your overall portfolio and net worth allocation, make sure you're strategic. Don't be spending money on high-cost bond funds that are going to detract from your wealth, where you can get, fee-free higher yield in a savings account. So think about those things, about why you might want bonds in your portfolio, how much you should have, and just how to be very well-rounded in your overall financial and investment planning. So there you have it. Continue to stay healthy, live wealthy, and we'll be checking in with you again soon. Take care.